Hey real estate watchers, Andrew Finney here. Boy, do we have a packed show for you today. Mortgage rates are doing the cha-cha, the Fed's playing it cool, and homeowners, well, they're staying put like they've superglued themselves to their front porches. Buckle up because we're diving deep into the wild world of real estate. Today we're tackling the big question on everyone's mind. With mortgage rates back at 6.5%, what's next for the housing market? Plus, we've got the scoop on why your neighbors aren't moving and what Fed's really thinking about those interest rates. As always, I'm bringing you the freshest data from the top dogs in the industry. We're talking Zillow, the Mortgage Bankers Association, even some insider info from the Federal Reserve. So you know you're getting the real deal, no fluff, just facts. Let's kick things off with the big headlines. Mortgage rates have climbed back to 6.5%, but is this their final destination? The great stay phenomenon. Why homeowners are becoming modern day hermits. Zillow's crystal ball. What's in store for home values and sales? The Fed's playing it cool. Why they might be pumping the brakes on lowering interest rates. All right, let's dive into our main story. Mortgage rates are back at 6.5% and everyone's wondering if they'll stay there. According to HousingWire, mortgage rates took a little vacation down to 6.24% in late September, but they've since packed their bags and headed north again. As of last week, the average 30-year fixed rate mortgage was sitting pretty at 6.49%. Now, you might be thinking, Andrew, why the yo-yo act? Well, it all comes down to our economy playing hard to get. Just when we thought things might slow down, the job market said, hold my beer, and kept on trucking. Sam Cotter, Freddie Mac's chief economist, put it this way: the rise in rates is largely due to shifts in expectations and not the underlying economy, which has been strong for most of the year. But here's the kicker. Even with these higher rates, the housing market's showing some serious resilience. According to the Mortgage Bankers Association, compared to last year, purchase applications are up 8%. And get this, refinance applications have skyrocketed by 159%. Now let's talk about what this means for you. If you're a buyer, yes, rates are higher, but don't let that scare you off. Remember, you're not just buying a house, you're buying a home. And with less competition due to what I like to call the great stay, more on that in a bit, you might find some great opportunities. If you're a homeowner, you're sitting on a gold mine of equity. With home prices still high in many areas, you have options. Maybe it's time to consider that home improvement project you've been dreaming about. If so, a HELOC can be helpful. If you're thinking of refinancing, even with rates at 6.5%, some of you might still benefit from a refinance, especially if you took out your loan when rates were even higher. It's all about crunching those numbers. Now, let's zoom out and look at the bigger picture. Zillow, a fan favorite real estate crystal ball, has some interesting prediction for home values and sales. In Zillow's latest study, they anticipate home values to climb 2% in 2024 and increase 0.9% in 2025. But what about home sales? Zillow predicts a gradual increase in existing home sales with an estimated 4.4 million transactions in 2025 versus a projected 4.1 million transactions in 2024. The same report says the sales growth comes from expectations of lower mortgage rates in 2025 that will bring more inventory and more home sales. Home values are holding steady in many areas. This is partly due to our next big story, the great stay. Folks, we're witnessing a phenomenon where homeowners are staying put like never before. It's like a game of real estate musical chairs, but when the music stopped, everyone decided they liked their seat just fine. Mike Simonson, in an article for HousingWire, explains homeowners have a good thing in their cheap mortgages and high equity. Buyers are reluctant to buy because no one wants to move out. This great stay is having a huge impact on the market. It's keeping inventory low, which helps maintain home values. It's slowing down the migration patterns that we've seen in recent years, like the exodus from high-cost coastal areas to the Sun Belt. It's creating unique opportunities for first-time homebuyers who aren't locked into an existing low rate. And let's talk about the elephant in the room, or should I say, the bear. Federal Reserve building. Fed Governor Christopher Waller urging caution when it comes to lowering interest rates. Why does this matter to you? Because the Fed's decisions on interest rates trickle down to mortgage rates faster than gossip at a neighborhood barbecue. According to CNBC, Waller's cautious stance suggests that we shouldn't expect dramatic drops in mortgage rates anytime soon. The Fed is walking a tightrope trying to balance economic growth with keeping inflation in check. But here's my take. This cautious approach could actually be good news for the housing market in the long run. It helps prevent the market from overheating and creates a more stable environment for both buyers and sellers. Feeling a bit overwhelmed? Don't worry, I've got your back. If you're trying to navigate this tricky market, whether you're buying, selling, or refinancing, give me a call. I'm here to help you make sense of it all and find the best path for your situation. let's tackle a question I've been getting a lot lately. Andrew, with rates at 6.5%, is it still a good time to buy a house? Great question. The answer, as always in real estate, is depends. Here's what you need to consider. Number one, your personal financial situation. Can you comfortably afford the payments at the current rate? Your long-term plans. If you're planning to stay in the home for a while, you'll have the time to refinance if rates drop. The local market conditions. Some areas are seeing price corrections which could offset the higher rate. Your rent versus buy calculation. In many areas, buying is still cheaper than renting in the long run. Remember, a home is more than just a financial investment. It's where you live your life. If you find a home you love and can afford, don't let the fear of missing out on lower rates hold you back. All right, real estate rock stars, that's a wrap for today's market update. If you found this information helpful, do me a favor and smash that like button. And if you want to stay on top of all things real estate, hit subscribe and ring that notification bell. Got questions? Drop them in the comments below. I read every single one, and you might just see your question featured in our next Q&A. Let's do a quick recap. Mortgage rates are back at 6.5%, but the market's still kicking. The great stay is keeping inventory low and home value stable. The Fed's cautious approach might mean rates stay higher for longer. Despite higher rates, it could still be a good time to buy depending on your situation. Remember, in real estate, knowledge is power. Stay informed, stay curious, and don't be afraid to reach out for help. Whether you're a first-time homebuyer or a seasoned investor, I'm here to guide you through this ever-changing market. Until next time, this is Andrew Finney reminding you that your dream home is out there. Let's go find it together.